another quiet shift in the stock market where we're moving away from some of these high-flying stocks that have really performed well over the past year, maybe even 2 years, to quote-unquote value stocks. Because when we look at Delta Airlines today, ticker symbol DAL, you are going to see a stock over the last year is up over 58%, but it's still trading at just 9 times forward. And the company just announced their most recent earnings. These were Q4 earnings last week, and they were absolutely spectacular. I mean, these are great results. We'll go through them. We'll also give you the guidance that the company gave as well. We also got some commentary from the executives on the conference call. Now, these not only apply to Delta Airlines, but I think we can extrapolate a little bit of this information and apply it to other companies that we could potentially be looking at. And then we'll also look at Delta Airlines from a technical perspective. What is going on, investors? Hopefully you guys are doing well out there. Now, we are covering Delta Airlines, and for those of you that have watched the channel for a while, Delta Airlines might be a new stock that we are covering. Well, this is going to be all a part of the new service that we are launching very soon, called the Blue Chip Stock Investor. Now, good news for you is the website guy is not even close to being done with Blue Chip Stock Investor. So we are going to be posting the content for free here on YouTube. Now, it's not profitable to do this. It takes several hours to kind of research a Delta Airlines, even a company that we're following on a second by second, press release by press release basis. It takes a while, and I'll post this video to YouTube and I'll make $12. So it's not sustainable to be posting this content, but for now, we're going to get it for free. And this is a very interesting situation, not only with Delta Airlines, but I'm seeing this across the board. I'm focusing more and more of my portfolio onto these quote unquote value stocks. You're not only seeing Delta Airlines have great performance over the past year, they're backing it up with strong results. Now, we got those results. Revenue came in at $15.5 billion. Look, that was 9% growth year over year. We're going to do tech company earnings here in about 2 or 3 weeks. There's going to be some of these tech companies. Now, they're at a much larger base from a revenue perspective, but in a profit perspective, but still 9% growth year over year. What is driving the growth over at Delta Airlines? They talked about it a little bit on their conference call. And then what they did is they saw that, and this not all showed up on this earnings report. This is what has the company bullish about subsequent quarters as well, is they saw a large uptick in business after the elections. And they noted that they really didn't see the strength of sales kind of leading into the election, but there was a definite uptick, and you could see and you could feel kind of post-election that goes out for 365 days. So they not only saw demand right after the election, but they believe that demand is going to continue. Now, some of that is kind of the cross-border or out of the United States. That is because the euro is trading almost in parity with the United States dollar. And as they refer to it, the quote, baby boomer is taking advantage of that, flying to Europe, going from New York to Europe, kind of enjoying their retirement and their golden years. It also translates into some of the segment results that we saw over at the company, that they are selling more and more of the premium seats, the first class, business class seats. The revenue there is growing faster than the main cabin or kind of the regular fare tickets. Again, that is all driven by the fact that you have these baby boomers, which are far less sensitive to prices as the maybe younger generation is there just simply building their wealth at the current time. Now, in terms of going forward with the company, Q1 is expected to be a little bit softer compared to last year at about $13.5 billion. Q2 up at $16 billion, but you don't have a lot of coverage on this. This is why Blue Chip Stock Investor will be a valuable resource for you, because you simply don't have a lot of coverage even on these relatively large companies. $43.5 billion, again, up 60% year over year. So don't ignore the airlines. We'll cover the rest of them as they start to report earnings. Now, the company talked up their Sky Miles program. This was also at the Consumer Electronics Show. Delta gave a big splashy headline keynote speech at CES. It was actually at the Sphere, that big kind of round dome that has all the lights on the outside. They talked up that partnership, and they've moved away from Lyft on the Sky Miles, and now they're moving to Uber. Think of this, Sky Miles is almost like credit card rewards and those types of things, and you can earn them and spend them across different categories. Interestingly enough, the company has also recently partnered with DraftKings, potentially allowing you to place sports bets or fantasy sports bets on DraftKings and then earn Sky Miles as a reward, and then maybe do some transferring there. The company also has a lot of in-air entertainment. DraftKings could become maybe an advertiser on there, or get maybe a discount on advertising. Delta Airlines also announced a partnership with YouTube, allowing you to have premium access to YouTube inside of the cabin of Delta Airlines. Now, the most recent quarter, interestingly enough, could have been even better. We going back a ways here, but that CrowdStrike outage led to large computer outages at the company and grounded a lot of flights. In fact, these earnings could be quite a bit better. Now, when we get over here to the revenues from a high level, you've got 9% growth on that total operating revenue. Most of it driven by passenger, but you had strong growth in cargo as well, up 32% on the revenue side year over year. Some tailwinds, so to speak, for this company could be lower fuel prices. We are all expecting the Trump administration to drill, baby, drill, if you will, and increase the supply of oil. The increasing supply of oil will probably not be able to be offset in the Middle East regions. And so we are expecting fuel prices to continue to go lower and lower. That's what happened during the Trump administration. Part of that was COVID demand ended up wiping out. But before COVID, oil prices were trending lower. You notice year over year, they were already down 18% on fuel costs. This is the number one cost other than salaries and employees. And so the further reduction in fuel cost for Delta Airlines will be beneficial. Across the board, they had most operating expenses continue to rise, but total operating expenses just up 7% year over year. So your revenues grew 9%, your expenses grew 7%. We're looking just on a quarterly basis. That meant your operating income came in 30% higher, up to $1.7 billion. When you look at it on the full year, paints a very similar story. Grew revenues by about 6%. Expenses grew also in the same range, and our operating income climbed 9% to nearly $6 billion. I want to remind you, now you might look at $6 billion, and that's what Google does like every 30 minutes, but this is just, and I say just, a $43 billion company. And so for the full year, doing $6 billion worth of revenue is absolutely fantastic from a valuation standpoint. Now, going forward, the company is expecting earnings per share to grow more than 10% in the first quarter, the 2025 calendar year. And they have 3 to 5 year targets where they're going to grow this by about 10% on average. Company believes that the baby boomers, which are sitting on equity, sitting on cash, have a ton of wealth build up over the years, they're going to continue to travel and continue to spend their money on travel. And also the younger generation continues to spend. Also, you have a little bit of tailwind from the business perspective. They talked about it on the conference call that you do have kind of a back to work, back to the office, and back to business. While it's not quite at pre-COVID levels, it's getting back there. And so you have this business travel as a tailwind. So they have plenty of growth coming from the earnings side. They're controlling their costs. They're really doing a nice job over at this company. We talked about how the main cabin remains under pressure. I don't think consumers view Delta Airlines as a quote low-cost airline. You're probably going to fly with Spirit or maybe Southwest or maybe some other ones out there. And so the main cabin, while it continues to be the vast majority of revenues, premium products, in fact, the company also talked about this on the conference call, they continue to upgrade the planes with more and more premium seating as, again, those baby boomer customers that are flying to Europe, they don't want to be in a small cramped seat. They want to upgrade, even if it's for a few $1,000 or whatever it happens to be. They're upgrading to these premium products, and you see year over year, those are up 8%. They continue to dump money into their loyalty program. Again, those continue to be strong. The company emphasized that during the Consumer Electronics Show, that they continue to reinvest in the loyalty program because they're seeing more attachment from those consumers to buy more and more products. Now, from a balance sheet perspective, you might think airlines and get a little nervous. Sometimes these companies are known for having pretty upside down balance sheets. That's not really the case here. Now, we don't have a mountain of cash, but we do got about $3 billion over at this place. And again, this is an airline. They make money putting very expensive aircraft and also relatively well-paid employees into the air. And so they have to put a lot of money, not only to the employees, but obviously their property, plant, and equipment. They've got the airlines or the airplanes in the air, but also a lot of crew members and equipment on the ground. That's about $38 billion of this company. Again, you are getting this company at a $42 billion valuation. Here they are on their balance sheet telling you just in property, plant, and equipment, they have $38 billion. So this is about as value as it gets. You look at total assets coming in at $75 billion. You look at their total liabilities, it's not that bad. Surprised the stock isn't up even higher. You've got debt sitting at about $14 billion. In fact, they've whittled that down over the past year from 17 down to 14. Total current liabilities sitting at 26. That's flat compared year over year. This company's doing a really good job. I tell you what, you don't get any interruption in terms of air travel. There's always going to be the crowd strike. There's always going to be different weather events and those types of things. They're going to impact air travel, but all in all, things look absolutely fantastic. Now, from a cash flow perspective, it's even better. That is because with companies like this, you have to factor in, they have some stuff on the non-cash side for like depreciation and amortization that chews up the net income. Well, you get to add that back in here on cash flows. And look at this, year over year, you're up to $1.9 billion of operating cash flow. Guys, this is for 3 months. This is for 3 months. I have to remind you too, so $43 billion company printing $1.9 billion of operating cash flow in 3 months. This is absolutely fantastic. Now, they have to invest in their flight equipment, aircraft, on the ground, off ground, those types of things. That comes in like maybe a shade over $1.3 billion. So you burn through a fair amount of that operating cash flow, but what it allows you to do is to continue to serve that debt. The company announced on their conference call, they're going to continue to whittle that down, and they're paying a small dividend. You get a little bit of dividend growth or a little bit of yield over at Delta Airlines. Not a big one considering how much the shares have risen. But again, you don't got a big valuation on this one either. Everything looks fantastic from a financial perspective. And if you believe the executives that the quote baby boomers are going to continue to travel, not only travel, but upgrade to those more premium seats, which I agree with. They also talked about the quote future generation kind of following in the footsteps. They start out in the main cabin, but as they get older and they make more and more money, they upgrade to the premium seats. And I know this just as myself. If I'm flying anywhere, I tend to buy the premium seats. Even my trip to Las Vegas, which is only about a 50-minute flight, I had premium miles, so I bought premium seats with it. Now, I could sit in the main cabin for a 30 or 40-minute flight, but anything longer than that, I am absolutely going to be in first class. It's just a nicer experience. All in all, you get on the plane sooner, you get off the plane sooner. You don't have to arrive and fight through the crowds. You also get to cut the lines as it relates to security. There was a giant line at the Las Vegas airport to get through security, but there was this little thing over to the side, first class passenger, cut the entire line, actually saved me a whole 30 minutes kind of getting through that line, and I got a call with my son that I probably wouldn't have gotten. So that was absolutely worth it. Now, from a technical perspective, the stock, as you can expect, up 50%. It's a little overextended. We're watching two things with Delta Airlines, and this will be a part of the blue chip stock investor. You're not going to be on your own with these types of things, and I'm not just going to let you fly blind, so to speak. What we are watching with Delta Airlines is two things. Number one, we've broken to the upside here. We made some highs back in, this is 2018, 2019. We got rejected at these areas, 2020 COVID drops. Now, here we are again, revisiting those areas. Two things you look for when a company revisits all-time highs is you're looking for kind of a blow-off. Seen this with Netflix. You saw this a little bit with Apple more recently. Seen it with NVIDIA as well, not more recently, but in the past. When you have these blow-offs, you could play this trade to the upside. Wouldn't do it here. I don't think Delta Airlines is one of those stocks that'll catch the imagination of people, but you get the blow-off. You're waiting for a pullback retest. That would be actual confirmation there. The other thing that can happen at these levels is you do find resistance. I put a green line in here. It's really a red line. This tends to be a resistance level outside of those blow off areas. You get pullbacks in Delta Airlines. There's going to be multiple levels that are going to be very exciting from a buying opportunity. And again, on Blue Chip Stock Investor, there'll be a whole section of the website where we kind of rate all these stocks. Right now, I would rate Delta Airlines as a hold. There are certainly some short-term trade opportunities that you could play, but that's not really what we're looking for in terms of Delta Airlines. But there'll be a section there where I will clearly lay out that, hey, these are the areas where we're looking at Delta Airlines. As it approaches those levels, I will send out an alert and say, hey, a couple of months ago or a month ago, we talked about these levels with Delta Airlines when they reported earnings. Now here it is. Here's the opportunity. Now, if the fundamentals change, the company's business doesn't look as good, then you reevaluate at that time. But what I like to do is actually plan ahead buying a stock, make that plan in advance. So when the company moves into the area that you're looking to buy, you have nothing to think about other than pushing that buy button. So right now, I would rate Delta Airlines as a hold. If you've been in this one for a while, I mean, you absolutely continue to hold it. If you're not in this one and you haven't noticed the trends in the airline business, it looks absolutely fantastic. And if you believe drill, baby, drill, Trump administration is going to increase the supply of fuel, which will keep prices at the very least where they're at, if not continue to decline them, that's a huge cost driver over at this company. Continue to drive those costs down. Well, that's good for this company. Also, this company tends to rely on Airbus planes, which means it's not exposed to Boeing's problems getting the 737 MAX off the ground. So Delta Airlines looking absolutely fantastic. We'll continue coverage as we move forward over on Blue Chip Stock Investor. But for now, we're out of here.